It has been one of the most speculated stocks in the Nasdaq over the recent years. Some have said that it might be the next Tesla. Most people believe that it might do well now, but it's eventually going to burst. Regardless, this is one of the most speculated stocks in the stock market in the recent years. As one of the heavyweights in the burgeoning industry, Lucid is also one of the few companies actually having a product. As time went on, the stock's price action, along with the investors' hype and hopes, went through some huge roller coasters, and some are still wondering if it's time to jump in this bandwagon. In today's video, we will look at Lucid and to see if the company still deserves to have a place in our portfolio. If you appreciate my content, please consider to drop a like, comment, and subscribe to my channel. Also, please check out the links in the description below, as every help is greatly appreciated. Lucid Group announced that they're going to start a partnership with the iconic British vehicle manufacturer Aston Martin. The agreement is definitive and aims to share technologies between the two companies. Lucid aims to integrate its powertrain and battery systems with Aston Martin, and the entire contract is worth around $500 million. They believe that this partnership is a game changer, or at least that's what Mullen said, which obviously should be taken with a big pinch of salt, since the current environment is full of, how can we put it, negative sentiment or bearish, indifference, which is ready to push the stock lower just because. But nevertheless, I think that Lucid believes that it can obtain Aston Martin's brand recognition in order to boost the sales, and more importantly, in my opinion, it'll allow Lucid to scale up without paying the upfront cost in full, which would improve and optimize Lucid's cash flow management. But despite those positive news, Lucid's share price fell by almost 30% over the past 1 month, a far cry from when they were suspected of going private with the involvement of sovereign funds. Now, let's also take a look with the technicals of the stock. The trading volume of Lucid is around 108 million shares versus the average volume of 51 million shares. Over the last 52 weeks period, the price fluctuated between $5.46 and $21.78. The volume of shares traded can tell us how many shares are being bought and sold at any given point in time, and if there's enough liquidity to support a trading strategy. When the float is thin, it can be easy to push the stock around, but it can also mean that it's going to be difficult to exit. When we compare the current volume against the average volume, there might be the possibility of trend reversal or breakthrough. So in this case, my feeling is the stock is gaining somewhat of a momentum, and it's possible that we're going to see at least some recoveries just from the volumes traded alone. The market cap of Lucid is around $10 billion with an enterprise value of $12 billion. What this means is that at least on paper, Lucid is currently trading at a discount, and this discount is probably attributed to the sector-wide weakness. As we compare the current price to the historical price fluctuations, the stock is 1.6% higher than the 1-month low, 1.6% higher than the 3-month low, and 1.6% higher than the 52 weeks low. On the options market, well, what it seems is that the implied volatility is that there's around 83% of implied volatility with a historical volatility of 70%. The put-call volume ratio is currently 0.29. And we have to keep in mind that this put ratio is probably higher than what it should be, because many people will buy put options in order to hedge their long positions no matter what. The most recent volume of options traded is 294,000 contracts a day versus the 30-day average of just 119,000. Regarding the open interest, The most recent volume of open interest is 976,000 contracts compared to the 30-day average of 1 million contracts. So, in terms of the shareholder structure, institutional shareholders own 73% of Lucid. This is a very good sign because I view the participation in the involvement of institutionals as a layer and a token of reliability, stability, and legitimacy for the long term. The market seems to be confident that Lucid can deliver value over time, which is an important factor to consider personally. I think that the minimum threshold should be at least 25 to 30% for the stock to be considered as a potential investment target and not just for trading. The current short interest is around 24% of the total float and 60% of the transactions from the dark pool. Lucid is an EV manufacturer that is poised to shake up the industry with the cutting-edge technology and designs. While other EV companies have been making strides in the industry, Lucid Motors stands out with its advanced battery technology, aerodynamic designs, and commitment for sustainable business model. So, in addition to the advanced technology and design, Lucid is also committed to sustainable business model by using the renewable energy sources to power the production facilities and wants to reduce its environmental impact throughout the life cycle of their vehicles. This commitment is what separates the company from other competitors, in my opinion. Another factor that makes Lucid Motors standing out is the focus on luxury segment. The company's first vehicle, Lucid Air, is a vehicle that is spacious and comfortable, coming with advanced drivers, assistance systems, and many other luxury features. When we look at the long-term tendencies of Lucid price action, it's not hard to see that the bubble that gave so much hope to traders around the world is now bursted. The market is no longer willing to blindly follow the latest hype, because on one hand, the market doesn't want to persist on believing that a beautifully made PowerPoint is better than a good financial report. On the other hand, it cannot afford to sustain the trend when supply chain issues, doubt over flagship companies within the sector, conflicts around the world, higher interest rates, and a looming recession have already been plaguing the real economy out there and also the narrative. The market has long predicted that there will be a bearish market after such a prolonged bull market, and that most stakeholders believe that it's going to be a rough patch for the next couple of years. The market peaked twice in the past, and if the first peak was caused by pure hype, the second one was triggered by the rollout of actual products. Lucid remains a company that has investment value in the years to come. The main question in everyone's mind is when should they enter in the stock? The long grind to lower price levels is likely caused by the market trends rather than the company fundamentals. So in that sense, things are not as alarming as they may seem. On the other hand, we should remember that sometimes, even if those grinds don't have an actual fundamental reasons, they may still last for a very long time and bring the price to very low levels. Hyliion and Paysafe are excellent examples in that case. Lucid had a strong financial performance in 2022. The company reported revenues of about $200 million in Q3 of 2022, a significant increase from just $232,000 of revenue in Q3 of 2021. This strong revenue growth was driven by the launch of Lucid Air, the company's first vehicle, which began deliveries in late 2021. The Lucid Air is a luxury electric vehicle that has been well received by consumers and that has helped establishing the company's reputation as a major player in the sector. Currently, they still have a negative net income, mostly caused by the fixed costs and other operating expenses that should be absorbed once the volume starts to pick up. Overall, Lucid's financial figures paint the picture of a company that is growing its operations but lacks a little bit in discipline and cost control, needing to scale up the operations to start having positive cash flows. Now, let's also cover the shareholder composition in Lucid, because this is a very important factor to determine if the company is better for trading or investing. Lucid is currently held by the institutional buyers for the most part, at more than 70% of the total float. This suggests that the price volatility of Lucid will be lower than other growth stocks, mostly owned by retails. The reason why this might be the case is because institutional shareholders have far more diversified portfolio and can afford to wait, so they don't mind the short-term volatilities. They also tend to stay in for a longer period of time, which is also a good sign for those of us who want to stay for the long run. Some key behavioral differences between institutional and retail shareholders include their investment horizon and also their level of involvement in the corporate governance. In other words, institutional shareholders tend to behave as if they own the company for real, that they are the ones deciding what is going to be the company's decisions, whereas the retailers tend to just behave as speculators. We come in and we aim to make more money than when we first entered in the stock, and this is the end of it. They don't see necessarily like the potentials of the money that there is to make 5 to 10 years from now. Whereas people managing other people's money can sometimes have this kind of opportunity to wait. The short interest of Lucid has been increasing in recent weeks, meaning an increasing number of investors are wondering whether it's a good time to sell the stock. Short sellers borrow the shares from brokers and then they dump it in the market, hoping to buy them back later at a lower price and making the profit from the difference. In the case of Lucid, there is a significant amount of short selling, but in my opinion, it's not sufficiently significant to say that there is a concerted short operation going on against Lucid. So I would say that this has to be put as a secondary reason at most. It's important to note that the short interest may not guarantee a short squeeze, but nevertheless, it's a metric worth monitoring. It's also worth mentioning that people shorting the stock often have a good reason doing so, and that a short squeeze may not happen regardless of how many stars are being aligned. Overall, I believe that Lucid is currently testing for its bottom, and definitely needs just a few more catalysts in order to break from its current tendencies. I think that Lucid deserves to have a place in the economy of tomorrow, but of course, for a portfolio's sake, it first needs to survive the dark clouds of today's economy. And also the fact that we haven't really seen the beginning of a massive price correction just yet. And the fact that people are more willing to buy equities when the prices are still very high. So because of all these, I think that the current opportunity might be a good timing to start to add up, to like increase our exposure for the long run, but very slowly. Anything that's above, I would say $5, would suggest that there is still some possibility for Lucid to make it back, and I would personally recommend to buy it at those discounts. In other words, I would recommend you to buy, but very slowly over the current period. I would recommend to commit between 3 to 5% of your portfolio, and to keep buying as long as Lucid remains above $5 and you're well within your allocated amount. So I think that an overall splitting of the allocation of 10 to 20% at a time over like the next year or two would be a good way to start.